Jonathan Jia Zhu is here with us and set partner and co-head of Asia Private Equity at Bain Capital. Good morning, and it's nice to see you.
Good morning.
Have things been busy? Busier? Not as busy?
Well, I think activity levels are pretty good. We had a good year last year both from a capital deployment point of view, doing new deals, but also from a liquidity point of view. And coming into the new year, I think things continue to look pretty good.
How do you look at deal making now? Are you seeing a significant pickup in the next coming quarters or so?
I think obviously, we cover a pretty broad swath of territory. We cover the entire Asia-Pacific region, and there are a lot of differences. I think when we started to invest in Asia, we deliberately crafted a pan-Asian strategy so that we can pivot to areas where things are more attractive, and I think if we look back at 2023, for example, I think India and Japan were very strong, were very, very hot. China was more difficult. I think looking into this year, we continue to see strong deal activity in Japan and in India, but also we're also beginning to see interesting opportunities in China as well.
Such as?
We have been focused on, I think, 4 broad themes in China. I think when we compared to China to 2 decades ago when we started investing, I think there are 2 big differences. On the one side, the growth is certainly much, much lower, right? Because back then we were seeing double-digit nominal GDP growth rate, so everything was growing. Today, it's a very, very different environment. But on the other hand, after so many years of rapid growth, China today has scale in a way that was almost unimaginable back then. In 2006, when we started investing in China, per capita GDP was about $2,000. Last year, it was almost $13,000. So that level of wealth increase, income increase, creates scale opportunities. The second thing that's different is that the level of sophistication, technological sophistication, geographic footprint has also increased pretty dramatically. Back then, it was very difficult to find mature businesses to invest in. Today, these opportunities are much more common.
I mean, valuations have been low in China. Do you see a floor or a bottom being formed here? I mean, we haven't seen a significant pickup in activities either.
Yeah, no, I think when unlike in public markets, right, when prices are set every day and trades are happening all the time, in the private market, this is a little bit. There is always a period of adjustment. When valuations decline, I think sellers would be very reluctant to sell, and buyers would be very reluctant to pay yesterday's prices. So there's usually a period of adjustment, and I think we are probably seeing that adjustment ending. That people are beginning to realize that the values that we see today are probably the right value, and so I would actually see deal volumes pick up from here.
You're in a very unique perspective. As you mentioned, you've been investing in China for 20 years, and I'm curious how the recent changes in just the geopolitical rumblings have affected, well, for one, has the investable universe narrowed for you because of, I guess to some extent, the second part of the question is what are global LPs and how they're looking, and what exposure do they want in China and what exposure do they not want in China?
Right. I think first in terms of deal opportunities, I think certainly the more complicated geopolitical environment makes deal doing more difficult. I say, when we look at investing in China, we look through 3 different screens. We need to look at business fundamentals, economic cycles. So that's one screen. We need to look at Chinese government policy priorities. That's the second screen. But then we also need to look at geopolitics. For example, the U.S. government has imposed restrictions on investment in certain areas like, advanced computing, AI, semiconductors. So then those make it more difficult for us to engage in. So the field, if you will, has narrowed. But as I say, on the other hand, the scale has become bigger. Right. So the opportunities are still there. So that's The second part of your question in terms of global LPs, I think LPs are very different, right? We have LPs from all over the world. We have obviously North American LPs, European LPs, but also Asian LPs. So with them, we see differences in terms of preferences. Some LPs are more cautious on China. Some LPs are actually more inclined to invest in China given today's valuation environment.
You mentioned a dilemma around tech, just given the political environment. I'm just wondering, it seems like a lot of U.S.-based PE firms are not really investing in tech in China right now. But you take a look at the innovation there, as you mentioned, it's getting more sophisticated, it's proliferating. Is that going to be something to be a bit of a missed opportunity for a lot of U.S.-based PE firms?
Yeah, no, I think, again, we need to probably look a little bit one level deeper. Tech is a very, very broad category. When we talk about tech, obviously, semiconductor, AI is tech. And I think for a U.S.-based GP investing in Chinese semiconductor and AI is going to be difficult because of government restrictions. But there are all kinds of other techs. There is China has actually made a lot of progress in industrial tech. Robotics, for example, batteries, EV. So those areas are still very much open for investment, and we are very interested in looking for opportunities there.
You mentioned other markets, India, Japan. What else is busy for you guys? What else do you think is going to be picking up substantially this year?
Yeah, so I think in addition to, we have a broad regional strategy, and we try to find investment opportunities in India, Japan, China, Australia, Korea, and Southeast Asia, so across the entire region. And in every fund, we have invested in all of these markets. Last year, for example, we deployed capital in Japan, in China, in India, and in Australia. And currently, we're looking at multiple deal opportunities in Korea. So I think what we see is actually pretty broad-based deal flow.
And is the split equal? I mean, how do you look at it in your latest fund? You have a $7 billion fund that's out. What's the geographical split now?
The split is, we don't have a predetermined split going into investing a new fund because it is always very difficult to do those kind of allocation because opportunities will come sometimes from unexpected areas. For us, we find Japan very interesting. We've been interested in Japan over the last 20 years, and today we have the biggest team in Japan. If we look at the last two funds, 3 and 4, we've deployed close to 40% of the last two funds in Japan, and I think right now it looks like that would continue. I think China and India are roughly the same, although given the current excitement about India and the current deal flow in India, that could change a bit.
All right, we're going to leave it there. Jonathan, thank you so much. Jonathan Jia Zhu there, partner and co-head of Asia Private Equity at Bain Capital.